Welcome to the Sirius report. This is Paul, and we're very pleased to welcome Eric Yeung back again today. We had a great conversation last time, and of course, as in keeping with the previous conversation, it will be everything China related. So, firstly, welcome, Eric. Very pleased you've come back again.
Thank you, Paul. It's a pleasure, and thank you for having me on your show.
No, it's a pleasure for us as well. So, we're going to discuss a number of topics related to China and in the gold space. And the first thing we thought we'd talk about is Chinese banks' gold accumulation program for retail customers because, and I share Eric's sentiment on this, it's a game changer. So we thought we'd start with that topic because we think it's highly interesting to understand the mechanism of it and what it entails. So away you go, Eric.
Okay, thank you, Paul. I believe that we talked a little bit about the Shanghai Gold Exchange last time and the annual gold delivery at the Shanghai Gold Exchange. So just to remind everybody, in 2023 and 2024, per year, each year, the Shanghai Gold Exchange delivered around 1,450 metric tons of physical gold. Now, most of that gold were for gold jewelry. So that's what we call discretionary sales in physical gold. The higher the price that physical gold goes, traditionally, the demand may either go flat or actually might drop for gold jewelry. You wear it. In some cases, for some people, it's a fashion statement. So that, to depend on that, as for gold consumption, might not be very stable going forward. So the Chinese government, as you know, Paul, you keep telling me all the time, look forward, right? They don't plan 1, 2 years or 3 years like the Americans. They're planning for decades. So what they did, they looked at that and they said, we have to increase liquidity for our domestic gold market, not only in terms of fiat dollar or RMB liquidity, but also physical gold liquidity in this market. So what did they do? They introduced two new programs in 2025, one of which is the Gold Accumulate program that Paul is asking me about today. And the other thing that they did is they recently, just almost a month ago, launched a pilot program, where they are allowing insurance companies in China, which are huge institutional investors, by the way, to invest 1% of their total asset under management into physical gold. But let's look back to the Gold Accumulate program. Why is that such a huge game changer? And why it is going to augment the gold jewelry purchases in China? So let's start off with the augmentation, how it is helping the overall liquidity, like I just mentioned. When you have these gold accumulate accounts activated in China, which really what they are, Paul, is they are like a savings account. So the zero yield, right? You don't get a yield. So you put money in there, you accumulate the fiat RMB, yen amount over time, and then let's say you're a small investor or small saver. In a month or two, you have enough money in there to purchase, let's say, 10 grams of gold from these Chinese commercial banks. By the way, the minimum withdrawal for some of these Chinese commercial banks for physical gold under the Gold Accumulate program, some of them is 5 grams, some of them 10 grams of physical gold. So you hit that dollar amount that allows you to buy 5 or 10 grams of physical gold, you can simply go on your smartphone, push a button on the bank's app, and then they will deliver the physical gold to you at your local bank branch at a designated time. And usually it's around 7 to 10 days. But right now, with the global, as you know, Paul, um, physical gold squeeze, some people call it, or everybody just want physical gold right now. The time that it takes is around 2 to 3 weeks, but nothing like what the Western experts are telling us, Paul. They are telling us that China is running out of gold, and that's ridiculous. It is not running out of gold. So back to what I was just saying. What does this gold accumulate account do for China as a whole? When you have savers or investors able to accumulate gold in fiat terms at the gold accumulate accounts and then withdraw it in physical terms. What happens is that you're introducing a new class of people in China who can buy physical gold without a huge price sensitivity attached to it. What I mean is, when you buy gold jewelry, if the gold price goes up, your piece of gold jewelry gets smaller for the same RMB yen account or amount or USD amount. Correct?
Yeah.
So people tend to buy less because they think, oh, hey, it's not a good deal now, right? Why is my gold bracelet smaller for the same amount of money? But if you are putting it attached to a savings account, like the gold accumulating program, all of a sudden it's an investment. The psychology for investment is different. Look at Bitcoin, right, Paul? The higher these things go, the more people want to buy. So that's why I said the gold accumulator account actually introduces liquidity in both fiat RMB terms and also physical gold terms. And I believe I'm the first person saying this anywhere, and I'm saying this on your platform, Paul.
Yes, and I very much appreciate the fact you have done, and it's good to explain to people how the program works, why it's efficient, why it's ease of access, and as you say, most importantly, okay, it's taken a bit longer than previously, but you can have guaranteed delivery, and you just go to, as you say, to the local bank and pick it up. And of course, we don't have those facilities in Western countries. Well, to my knowledge, I'm not aware of it anywhere. And and it is a game changer, and it does increase accessibility and increases the liquidity, and also it makes us the market more accessible to more and more Chinese people, which is the whole basis of the Chinese ethos, that everything has to work better for the people. And in this case, that this is a clear example of why this program would do the very thing it intends to do.
And it does change the psychology of the people buying gold in China. Because I go on Red Note and I see a lot of gold brokers or just what you call investment advisors in China saying that physical gold is now a viable option for their high net worth Chinese customers in China. So this gold accumulate program is definitely geared towards that, towards these people. And to loop back again to some of these Western experts, I guess, observations, they're unique observations from 50,000 miles away. Some of them never been to China. And they're saying China is running out of physical gold. Well, guess what, Paul? China did two things to ensure that physical gold flows into China is continuous and undisrupted, even with the current quotation marks physical gold shortage situation at the LBMA. Number one is we go back to the gold accumulate program. What are Chinese commercial banks doing? These Chinese commercial banks are now saying to Chinese citizens that they will buy back physical gold bullion from other Chinese commercial banks. So in the past, what they did was that they only buy back their own products. Like in the US, we know that's like happens with a lot of coin shops or bullion dealers in the US, they only buy back their own product. But starting last week, now this is news that is not disclosed anywhere or announced anywhere on X to the Western audience. Okay, I'm the first guy saying it on your show. What's happening now is that Chinese commercial banks are telling the customers that they'll accept any gold bullion from any banks, and that effectively increases the physical gold liquidity in the system. So that's why I don't see super long delays right now at Chinese commercial banks under the gold accumulator program. It's still around 2 weeks to deliver.
Yeah, and the great thing again about this, well, firstly, it's great that you've mentioned it here first, and we appreciate that. But again, yes, it increases liquidity, but again, it's ease of the individual to then be able to go and sell their gold rather than, as you say, having to go back to the source from which they bought the gold, because for argument's sake, you may have bought the gold at some period in time. You might move a huge distance in China, and then you may have a problem. Doing that now, you have the flexibility to go and sell it, and of course that does significantly improve the liquidity, as we said, and that's extremely important in these markets, because if you want to encourage the likes of you and I to use this accumulate program, you've got to ensure that you do have ease of buying, but also ease of selling. If you make it ease of buying and not selling, then you're going to discourage people, and then it makes the program inefficient and, of course, by definition, illiquid. So again, that's a very smart move, and appreciate you telling us this.
Thank you, Paul. So the second thing, that China did to ensure that the gold flows don't stop in exactly the scenario that we're seeing right now at the LBMA in the US is, if you remember, Paul, I think you broke the story. You were the accounts on X breaking that story, that President Xi went around the world, especially South America, to establish direct relationship with mines, buying commodities and gold and silver directly from mines. And we see now that that's paying off. A lot of people made fun of President Xi. Remember, Paul, when he gave loans out to these countries, they said China will never get that money back. Well, now it's paying back. It's paying back in dividends and more, because it's ensuring China's gold, silver, and commodities supply chain goes on fully, smoothly, without any disruption.
Yeah, and the other point worth making about it, because of the nature of what the market is and you're buying it at source, so to speak, Dan, this also comes into this area where there's an awful lot of commodities, gold and silver traded, that isn't part of official Western statistics. No one's aware of it. And it's also worth making the point with China that gold and silver is a matter of national security. So therefore, I mean, some data, yeah, for sure is accurate, but China also treats them as strategic assets. And because it is a matter of national security, hence the PBOC has hugely larger quantities of gold than the West understands. And of course, from their perspective, it makes abundant sense to keep it under the radar, which is why they've spent, from my knowledge, at least the last 14 years, accumulating huge amounts of gold, and a lot of it is under the radar. And that visit by Xi was, for as much as anything, precisely that reason, because they can accumulate commodities, not just gold and silver, in ways that then it keeps the rest of the world isn't aware of what they're doing, particularly the West. who might suddenly start asking questions why China's buying enormous quantities of whatever it might be, gold or silver, although even publicly, China has not hidden the fact they've bought enormous sums of silver, because some of that is going to be obviously more obvious to markets than others, and that's as much as anything why Xi did what he did. And yes, everyone thought it was pointless, ridiculous, but with the Chinese, nothing's pointless and ridiculous. There's always a reason for doing things. And I think for me, once I understood, having spent quite a lot of time in China and worked in China and worked with Chinese people, is once you understand the way they think, then you begin to see the reasons why they do what they do, where most Westerners think that their understanding of China is through the eyes of a Westerner. And as I've always said to people, it's fundamentally flawed because the Chinese don't think like we do.
Okay, Paul, do you want to talk about the next topic?
Yes, yes. So should we move then on to this topic to do with Chinese insurance companies? We kind of briefly discussed it last time. And so you've got more information to share. So that'd be a good topic for the next segment.
Correct. So, Paul, as I said, China introduced two programs in 2025. And the first one was the Gold Accumulator Program. And the second one, which they introduced just earlier this month, is that they are launching this pilot program that allows the insurance companies, which are huge institutional investors in China, to invest 1% of their total asset under management into physical gold. So why is that a game changer? First of all, that's structural physical gold demand right there. Because the insurance companies are going to be price insensitive for the physical gold that they're buying. They're just going to accumulate over time. Just like the Western ETFs, sort of. And then on the other hand, this is only a pilot program. It's 1%. It can be tuned up to 5% or 10% later on. But let's talk about the physical gold volume that this is going to generate. Now, the Bank of America did an estimate, and they came out with a number which is 300 metric tons per year from the gold insurance companies in China buying this physical gold. 300 metric tons per year. Now, like I said, that is significant. These 300 metric tons only represents 1% of what they are buying right now with all the assets under management. If the pilot program is successful, this can easily be tuned up to 5%, and that would represent 1,500 metric tons per year. Think about it, Paul. That's doubling the amount of physical gold that people are buying through the SGE per year. That's 3,000 metric tons right there. Boom. And that's not even including the additional gold that is going to be bought through the Gold Accumulator Program. So that's a significant structural change, correct? But let's step back for a second. Let's not. I know, Paul, you don't like to speculate. You like to use actual numbers happening right now, right? Let's step back, okay? Pull that back a bit.
But it's fine. In that case, that's fine. That's not aggressive speculation. That's quite conservative exercise.
But let me step back a bit, okay? And I'll just use numbers that are going to happen in 2025. Okay? So using the BOA projection, which I think is totally legitimate because it's just a spreadsheet, balance sheet kind of calculation, right? 3,000 metric tons. Not exaggerated. It's just from their total asset under management percentage, and then they take 20%, 30% discount. Because some people ask, well, like if these insurance companies are buying gold, isn't some of it going to be structural products like gold leasing? So the Bank of America used that equation on their calculation on the 300 tons. So that's legitimately 300 tons physical gold. Okay, from the insurance companies buying in 2025 projected. Now stepping back a bit, even more, the gold accumulator program. We talked about how it worked, how it's going to encourage investment from small investors and also high net worth individuals in China to invest in gold. But we didn't talk about how much. So that I'm just going to lowball this. I'm going to say 300 metric tons of physical gold from the gold accumulator program in 2025. I believe it can easily be 600. Can you see that, Paul?
Oh yeah,
I
easily.
mean, from the easily, but let's use 300 because your show is all about, we put our 2 feet on the floor, on the ground, when we want to be realistic, right? So 600 from the gold accumulator program and the insurance companies buying. That's 600 additional physical gold demand from China per year. So that would make Chinese physical gold demand, it'll take it from 1450 to around 2000 metric tons per year. Correct?
Yep.
Now, Paul, what do you think the gold mining supply, the world gold mining supply is right now per year? And not the crazy numbers that the LBMA guys project, but World Gold Council, they're more honest. What do you think it is, Paul?
Well, I think you said about 3,000 tons, was it?
Yeah, 3,600 tons.
Yeah.
Okay, so in 2025 alone, China is taking more than half of that, 2,000 tons. So we're down to 1,600 tons of physical gold for the rest of the world to share. India last year net imported, not gross, net meaning that that's the total import minus total export, 700 tons. So your 1,600 is now down to 900 metric tons. How much is the US importing in the last couple months? I'll give you a number, 700 metric tons. I'm not even talking about OTC, Paul, because I know you don't you don't like to speculate on OTC, right? So let's
Well, no,
just talk about.
but it's part of the equation, and it's
Okay.
quite probably significant. So, but anyway.
Okay. Anyway, so we talk about like COMEX just the last 2.5 months, 700 metric tons, and then 200 metric tons from Switzerland, direct export to the US. So not through the COMEX. Okay, so that's 900 right there. So we're down 1,600 minus 700. Okay, that's 900. And then the US just the first, not even the first quarter is not even over, and they already took all the rest of it. So we're in a structural, my point is, Paul, we're in a structural physical gold deficit from this point on. And you taught me this, Paul. Remember when we first met?
Mm-hmm.
What is the cure for lack of physical gold? What is the best cure for a structural deficit of gold in the long term? Because I know you like to talk about long term. What is that? What solves everything? You keep telling me that. Price, Paul.
Yes, of course.
You told me that. Remember? You
Yeah,
said,
yeah.
Eric, price can solve everything, right? So I do think with this structural deficit, we really have a pressure on the US dollar price of gold to go up. We don't need anything special or speculative or imaginative to make the price go up for the long term. That thank you, Paul. You taught me this. You keep saying it. Let's keep everything grounded and let's keep everything within reality, right? And it's already happening. Am I correct?
Yeah, absolutely. I mean, it is.
Just with the numbers we're discussing, right?
Yes, absolutely.
So anyway, so I think, do you have any questions for the insurance? I think we pretty much discussed all of it.
No, that's fine. I mean, I'll just,
Yeah.
sort of summarize a bit. You've clearly indicated very conservatively, which is a good thing, that we are going to have physical shortages globally in 2025. We're already seeing evidence of that in places like South Korea, for example. I've been told, maybe you can confirm this, Eric, about shortages in certain parts of the Chinese market. I'm not talking about a significant problem. I'm talking in elements of the retail sector. But in general, there is going to be more and more shortages because you can't plug gaps all over the world if suddenly there's greater demand in the US, or these gold accumulate programs in China, or these Chinese insurance company. Something has to give, because suddenly there is greater demand in parts of the world. Well, China's not a surprise, but it's still an increase, and we'll see what happens with regards to gold moving to the United States going forward. But still, it's going to put stresses and strains, which is exactly your point. And you're correct. And the only way to remedy that is price increases. Now, what that means remains to be seen. But I think you're likely to see more of a gradual price increase. Okay, there might be some sharp gyrations here and there in that regard, but rather than necessarily someone coming along and saying, right, tomorrow or next week, we're going to reprice gold to whatever that might be. And I think that's more likely how a sensible gold market should operate, where it is, if it's true price discovery, it's based on true supply and demand. If the demand's huge and the supply is not there, well, the only way to create that supply is to raise the price.
Yeah, I agree with that, Paul.
Yeah.
I think another thing that I think we discussed before recording, we were talking about how the Chinese government's Made in China 2025 is actually reaping a lot of success now, especially in the area of China's dependence on crude oil imports. You were asking me that, right, Paul?
Yes, well, yeah, we wanted another subject we wanted to discuss was China's dependence or lack of dependence on oil, basically.
Okay, so I'll give your audience some numbers, Paul, so that they have some reference, they have some benchmark to look at before we go on and analyze the situation. Okay, so I'm going to start off with this. I'm going to tell your audience that China's oil demand actually started stalling or falling in around COVID. So during COVID, because everything stopped, the oil demand actually went down 5.4%. And then 2021 to 22, it stayed flat because if you remember, Paul, China was still kind of like under semi-lockdown.
Mm-hmm.
And then 2022 to 23, it rebounded 10% because China was opening up. I believe you were one of the first accounts that broke that story when China reopened.
Yes.
If you recall, right? But then something interesting happened in 2023-24. China's oil demand actually fell again, minus 1.7%. And then last year, 2024, stayed flat, basically zero. Okay, it's estimated, but it's basically zero. So what's happening? A lot of experts on X came to me and said, hey, China's in a recession. China's economy is imploding because of these figures. Well, guess what, Paul? I have the electricity consumption figures from the Chinese government, and that's what every other premier in China, every premier essentially, uses to gauge China's economic activity, because that's the only honest data that you can use. Every other data you can manipulate, but this. So let me just read it. 2020 to 2021, China's electricity consumption went up 10%. 21, 22, 4%. 22 to 23, 6.7%. 23 to 24, 7%. 2024 to 2025, 6%. So do you see a pattern here, Paul, that doesn't jive with the Western experts' narrative?
Oh, yeah, absolutely. I mean, clearly, why, if your economy's cratering, as they keep saying every year for longer than I care to remember, but let's go and look at it in the period you're referring to, you wouldn't have that kind of growth in electricity consumption because, by very definition, that implies the opposite.
Okay, yep. And electricity consumption is a big gauge for Chinese factory activity as well, because a lot of factories they either use natural gas from Russia, or they use electricity. And also, looping back to our question about crude oil and crude oil stalling and dropping in terms of Chinese crude oil imports. Guess what just happened last week, Paul? I mean, I told you before the show, so you know already, but I'm going to say it right now.
Yes.
China's electric vehicle um, percentage compared to ICE vehicles just broke 50%. So there are now more electric vehicles on the road in China than ICE vehicles. And I'm the first guy saying it to a Western audience on your show. There you have it. I
And
mean, and sorry, go ahead. Yeah.
sorry, and anyone who doesn't understand what that means, that is enormous. That is huge. That it's now over 50%. Because just look at I don't have the statistical data at hand for, say, European countries or North America or whatever, but it dwarfs them basically.
Yeah. So I was just going to say, Paul, in the past, 50% of all the oil imports all the oil that China brings in goes to vehicles, ICE vehicles. So think about this. All of a sudden, you're knocking half of that demand away. That means that's why you're seeing the oil imports from China stalling and starting to go down. It's not because China is imploding as a country or its economy imploding. Me and you both know that's a lie. It's because China is lessening its dependence on crude oil because of its success in electric vehicle implementation and manufacturing. That's the real reason. So, guess what, Paul? The US's usual trick that they use to squeeze Eastern countries, like what they did to Japan, right?
Mm-hmm.
Blockade the Strait of Malacca at Singapore, might not actually work that well with China down the road, if it ever comes to that. Do you agree?
Oh, absolutely. Yeah.
If this trend continues.
Yes,
Yeah.
it's completely irrelevant.
I know you said that, but like some of our mutual acquaintances don't really agree with that. You know who I'm talking about,
Well,
right?
yes, but
And
that's
have
fine. Just
made some counterpoints.
leave them to
I
it.
know, I understand. So I think that's the I'll wrap that up. I've with the Chinese EV crude oil discussion. I think that pretty much wraps it up.
Yeah, and it's
Yeah.
a perfect example again when you have statistical data that highlights the reality of what the Chinese economy is. And it's okay, you can talk about oil consumption falling, but unless you present the flip side, which talks about the growth in electricity consumption and why that's the case, then you're either ignorant of facts or misleading people. And when you present the whole thing like you've just done, Eric, then it eloquently highlights the reality of how the Chinese economy and industrial manufacture continues to grow. It's just they're doing it because they're consuming far more electricity in the process. So I think Dan probably move on to the next topic, which was basically the LBMA, but in relation to China.
Yeah. So I am actually a subscriber to David Jensen, and he's a LBMA in he has connections with LBMA insiders, and he's a Boolean researcher, gold and silver. And he recently wrote that out of the at the LBMA right now, there are approximately 12,000 metric tons of paper gold promissory notes that are outstanding right now. What does that mean, Paul? That means there are 12,000 tons of gold promissory notes at the LBMA that can potentially stand for physical delivery. Now that's a crazy situation that I guess I'm not shocked with that because we all knew you pointed it out, Paul, many times that the LBMA is super over leveraged in terms of paper, right? I think you said a couple hundred to one. Right now, I don't believe it's a couple hundred to one because this they are doing a physical squeeze at the LBMA. But anyway, with the 12,000 metric tons of paper promissory notes outstanding right now, even with the numbers from the last 2 months, which conservatively speaking, I think the LBMA delivered at least 250 metric tons per month in the last 2 months. I think the current ratio of paper to physical is probably 40, meaning that there's probably 300 metric tons of physical gold standing for physical delivery at the LBMA out of the 12,000. Now, when you have a situation like that, and the LBMA went from T plus 2 to T plus 30 or T plus 60, now that number is from Reuters in their January 29th report or article. They talked about that. Essentially, what that means is that the LBMA already defaulted on their spot contracts. Agreed?
Well, yes,
And yeah,
seems to be
okay.
the case. Yeah.
Yes. So looping back to you, Paul, you were the guy who broke this story a couple years ago that the Chinese commercial banks exited and withdrew their memberships. Or, I know that that is not officially reported, but they basically ceased their activities at the LBMA. And you reported that. And a lot of people, I remember, were questioning you, Paul. They were saying, why is that? Why are the Chinese banks running away from the LBMA when money were there to be made? Was there to be made? Well, now we know why. Correct? Now we know
Yes.
why.
Yeah, of course. Because they could foresee the future, which was always been my point for over a decade, that eventually the West, because of all the problems with paper compared to physical, that at some point the West, in inverted commas, you have to be careful when you say runs out of gold. It doesn't literally, but in this situation, the stresses and strains become so great that therefore you start to enter situations like we've witnessed in the first couple of months of this year. Precisely what happens when you do, in a sense, run out of physical, and really it's like robbing Peter, not literally to pay Paul. You're just musical chairs. You're just trying to juggle gold all around the world to try and satisfy and fill holes in those markets. Now, just worth mentioning, when you talk about 12,000 tons, approximately, that's 3.5 years of annual gold production based on the figures you gave earlier. That just puts some context as to the amount of outstanding paper contracts. Just another point I thought I'd make with regards to ratios of being 100, 200 to 1, they were in the past. It has decreased. I mean, obviously, you've said 40 to 1, and that makes complete sense. So some of the problems that have existed in the paper market has been alleviated in the last 18 months. But then, is that any surprise that in dollar terms, the gold price in that period of time has risen from about 1,800 to 2,900 and something, whatever it is today, it doesn't matter. But that's part of the reason why the price has risen as well, to alleviate some of the stresses in those paper markets. But clearly, it's still a significant problem. And, if those figures are accurate, based on, I'm assuming they are, I'm not questioning them in any way, shape, or form, then it continues to illustrate the problems when 12,000 tons is about 3.5 years, as I said, of global annual production.
Okay, well, Paul, just before we head into the last part of the show, I know you got one last question that is very good. I want to loop back and connect the EV situation in China with silver. Because guess what is being used in EVs, to make electric vehicles? Is silver. I mean, even if you use the most conservative estimates of silver usage in EVs, is 2 troy ounces per EV.
Mm-hmm.
Correct, Paul?
Yes.
We both know that, right?
Yes.
And that figure actually blows up to millions of troy ounces of silver, because millions of electric vehicles are being made. Like I said, 50% of Chinese vehicles now on the road are EVs. So there I say, Paul, silver is partially replacing oil as China's, I would say, energy import, as a vehicle to conduct energy. Correct?
Yeah, absolutely.
Is that estimation? What do you think with that
Yes,
analogy?
I'd agree completely. And yeah, it's a very important distinction, just the importance of silver as an industrial metal, but in this context, when it relates to EV. So yeah, it's absolutely correct. And it's an important thing that is often overlooked by people.
Okay, so I'm going to give your audience some numbers now. I hope they got their pens ready, because there's a lot of numbers. Okay, I always come prepared with a lot of numbers, because I know that people love the numbers to put things into context. Okay,
Absolutely.
so yeah, what is the I wouldn't say permanent, but what is the most common, or the most or the number of silver that you see at the SGE and the SFE on any given day, in any given day? I'm talking about the number in terms of weight of silver at the SGE and SFE, which is the Shanghai Futures Exchange, silver vaults. I'll just answer 3,000 metric tons.
Uh-huh.
And in any given day, pretty much. I mean, it goes up and down a little bit, Paul, right?
Mm-hmm.
Couple hundred tons, but it's usually around 3,000. So one of my followers said that's almost like a river, because it doesn't stay there. It's just a conduit. It's like a buffer. Comes in and out, in and out, in and out, right? Okay.
Mm-hmm.
What do you think the LBME claims that they have at their vaults in London for physical silver? Claim, I put it in quotation marks.
Go on, fire away. I'm not sure.
I'm just going to say it, okay?
Yeah.
20 to 27,000 metric tons. Now, Paul, given the current situation, like, they pretty much lied about the gold stockpile. They don't have 8,000 tons of gold. We know that because it's T plus 60, T plus 30. You think they have 27 or 20,000 tons of physical silver at the vaults? At the LBMA?
Well, no.
Probably no, right? Probably no,
Yes,
right?
Probably not, no.
Probably no. So from the Stilfen Institute, we know that the world is in right now, 8,000 metric tons of silver deficit per year. That's just from mining.
Sure.
And that's not even counting the potential lie coming out from the LBMA. Think about that, Paul. And then look back to what I said. China's using silver as a conduit for energy going forward. It's basically China's new oil. It's a baby oil, but that baby is growing, right?
Sure.
So what is happening? Now I'm going to say something that you probably know already, okay? China, in the past, who did they work with when they opened up to the West? They worked with JP Morgan, Morgan Stanley, Goldman Sachs, and usual suspects, right? I mean, all the usual suspects. Oh, just the Western bullion bank commercial banks, the investment banks, right? The big guys. So a lot of people say China want the price of silver to go up. In the past, they tell me that. Why would they? China uses physical silver as a industrial metal, unlike gold. China has a reason for the physical gold price to go up, but it always wanted to contain the price of silver. And it had help from the Western banks all this time. But something has changed, Paul. What has changed? In the past, China worked within the Western colonial system. What I mean by that is something that Sultan Posa wrote about. You know Sultan Posa, right?
Yes, I do.
He's from the Swiss bank, was it?
I think he's
What's
at
that
Credit
bank called?
Suisse. Yeah.
Credit Suisse, that's right. He's from Credit Suisse. And now he's an independent analyst. But he wrote an article before he went behind the paywall. And the article basically said that the Western system, and I'm sure you agree with this piece, you wrote about it as well, Paul.
Mm-hmm.
It's basically all about extracting profit from the global South. I mean, as a matter of fact, I remember you saying this. You said Sultan Posa copy you when that came out. Remember that, right?
Yeah,
That was a few years ago. Yeah. So you were the grandmaster of this whole thesis, right? That the Western, system is designed to extract wealth and resources from the global South.
Yeah, I mean that's
okay.
Basically what neo-colonialism is.
That's what it is. Exactly. As you have explained over and over again in the last couple of years.
Mm-hmm.
And what is China in that atmosphere in the past? China provided the cheap labor. China took the natural resources that the West assisted China to extract from smaller global South countries, and then China would make the stuff cheap, ship it back to the US or Europe. Now, the Europeans and the Americans, they designed the product. They were the engineers, they designed the products. They simply contract manufacture through China. So China was the contract manufacturer, but it's not their intellectual property. I'm talking about in the past, meaning 5 years or more ago. Okay? So in that environment, as you have described, neo-colonialism, it makes sense for everybody to suppress the price of commodities. Correct? It makes sense.
Yes. Yeah.
Because everybody want to make their little cut, right? But what happened recently in the last 5 years? As you reported, Paul, you were the first one. Again, China now owns the entire manufacturing value chain. Think about that, Paul, right? You were the guy telling me, you said, look, Eric, they're designing the thing, they are engineering the thing, they're manufacturing it from top to bottom. They don't even need any American help or German help. They're doing it, and they're even marketing the thing. So if you're German, or if you're an American, or you're from France, what kind of money are you making in this value chain? Not much. Like China essentially broke what you talked about, the neo-colonialism model. China broke it in the last 5 or 6 years. And that's thanks to President Xi's Manufacture in China 2025 initiative, correct? I know you praised it. You had the foresight to praise it when everybody made fun of you.
Well, yeah, but and it's just seeing the obvious and understanding how China thinks, basically.
Yeah. So back to our story here. Now China have wings, right? It can fly on its own, doesn't need the West to carry it. And it's making most of that profit in that manufacturing value chain. Well, now it doesn't make any sense for the Western bullion banks to suppress the price of silver to assist China, since China is the biggest manufacturer in the world of these products. And what I see is that some bullion banks in the West are still not with the program, with the switch, but once that switch is complete, then I think the shackles on silver will be removed and the price of silver will go to a more realistic equilibrium where we don't have 8,000 metric tons of deficit and growing.
Yeah, absolutely. I would completely agree with that.
Yep.
So I guess we come on to the last subject, which is quite brief but very important because, again, it highlights people seeing some data in China and jumping immediately to wild conclusions that have no basis in reality. And this relates to M2. And I know you've got some thoughts about it, so it'd be great if you could share it with the audience.
So, yeah, Paul, me and you both saw the commotion with the Chinese M2 just going hockey stick, right? Like by the way, in Western charts that were made by Western specialists, okay, not Chinese, financial experts or analysts, but this is in the West, right? They came to me, running to me, and they say, "Hey, Eric, look at this! The Chinese M2 money supply went hockey stick. It's game over for China. China's imploding." And I think that was like 6, 7 a.m. when I saw that. I just woke up a little bit. I saw that. And I was like, what the heck is going on? But in reality, what happened, Paul, and you know this already, I'm just going to say it, is that China has changed its M2 calculation methodology. So that's all it is. It's just like, adding more stuff in terms of, I'm just going out of a limb here because I'm not a monetary specialist, but they probably just put checking account stuff that weren't in M2 into M2. So it looks like there's more money in that M2 chart, but essentially it's not because it's just stuff that already exists that they included in M2. That's what happened.
Yeah, exactly. I mean, and it was just, again, another opportunity for people who are frankly desperate to believe China's collapsing every 5 minutes to go, oh, look, this says this, without actually checking what that meant. Again, it's like oil consumption's down, but what else is happening? Oh, electricity consumption's up. But I think with people, sometimes it's kind of a fear, and they really want, excuse me, China to fail in inverted commas because they are frightened that China is going to become an hegemonic power, which it has no intention of being. And they think, well, if we're not the hegemonic power, China will be. And then they'll turn the world into what China's like. And then, of course, they have all these ideas about what China is internally, which, of course, is all wrong as well. So a lot of it is based in fear as much as and anything else, and a wish to see China fail. And of course, it's just not going to happen.
Okay, well, thank you, Paul. I think that wraps it up for today.
Yeah, and thank you very much. I appreciate your time and your insight. It's extremely interesting, and you give it the factual basis, which makes it far more robust. It's very difficult, well, for me, impossible to argue with facts, even though I know some people like to do so. So, Eric, thank you very much again. It's a real pleasure. Really enjoyed today, and we look forward to doing more in the future.
Thank you, Paul. Pleasure is all mine.